very good. Thank you so much. All right, and here they come. Go get them.
So good afternoon, everyone. It's a great honor to be here on this stage to have host this panel and then discuss a very important topic, institutional CeFi and DeFi trading infrastructure, because I mean, crypto stock as a decentralized digital asset, and it's all about decentralization, but it's really the institutional money and the participation of institutions that push us to where we are now. So yeah, today I'm very honored to be here and have this session with this great mind. On the panel, we have a representative from the decentralized world, including Chae Ho from 1inch, which is the most famous DEX liquidity aggregator. And then we also have Rani from Orderly, which is a liquidity network that's omni-chain. And then we also have a centralized, representative from the centralized world, including Edwin from Gate, the famous exchange. We also have Damon from One Token, which has basically an asset management platform for all crypto, our digital asset management. And also Alina from Avelacom, which is one of the world's most famous connectivity technology provider, right? So let's cut to the chase and talk about the topics here, right? So today when we talk about CeFi, DeFi, I did a little bit of research. Today, over the last 24 hours, centralized exchange is trading at 70 billion by volume. In DEX, it is only 70 million. So it's 1,000 times difference, right? So the question is really like, what do we, like, why is this happening, right? Why the centralized exchange has a lot more volume and users than the decentralized exchange? What can we do to further increase the on-chain trading activities? So why don't we start with Chae Ho, so that you could share some of your perspective?
So why is there such a volume difference? Well, to be honest, I tracked the market data as well. I think the difference is not 1 to 1,000. I think it's much more than that, actually. But but I admit that it's still the DeFi volume is much smaller than the CeFi volume. I mean, that's I think it's pretty obvious that it's because of the sophistication of UI and UX, especially. See, I tried this with my own friends, my own family. I try to get them to use their own wallets, like MetaMask, to make their own MetaMask wallet. Hey, try this out. You'll get this free airdrops if you know how to work this out. Doesn't happen. They like the friends of mine who don't know anything about the crypto space. They know how to make the CEX accounts. It's easy, and once they make it, and it's easy to trade on them. But DeFi requires additional knowledge, additional learning and education. And I think that's, so UI UX is definitely the biggest hurdle that's creating this difference in the volume, trading volume. And that's actually one thing that 1inch is really working hard on to match the experience of CeFi for the users who use the DeFi, so that we can bring the mass adoption here. So that's definitely one thing. That includes the complexity of creating accounts. In addition to that, and the other UX would be the gas fees, understanding of different chains, because like you switch into a different chain and you don't see any of your assets, and the expected reaction from a typical user or a mass user is that, hey, where'd my fund go? And they'll freak out. So these are the things that need to be addressed, I think, in order for the DeFi trading volume to go up. Because right now, it's really amongst the sophisticated crypto users who understand and who's willing to learn more about the products. So it really has to, the difficulty of UI UX has to really improve to bring more volume towards the DeFi. That's, yeah. That's my opinion.
So I totally agree. I mean, like for everyday users, non-crypto people, when they first get into crypto, understanding all these different widgets and gas fee and all this concept is very complicated, and that's definitely the hurdle. Ran, from your perspective, also coming from the decentralized world, what do you think is the biggest hurdle now, and what can we do better?
Yeah, I will agree with a lot of your points. I think one of the things that we're trying to do is called chain abstraction, right? So users should be able to deposit from one chain, some native asset, trade and withdraw from another chain. I think at the end of the day, DeFi has to have the same, if not better, experience as CeFi to be competitive somewhat. I mean, DeFi has very natural advantages such as permissionless listings, transparency, and Web3 tokenomics in rewarding stakeholders in a way that CeFi does not. So I think, but the UX is not good, right? Just even from the onboarding, which wallets are solving, account abstraction, and now like account aggregation and fiat on-ramps to the experience of switching chains, the UX has to be a lot better, right? So I think the day when the UX matches that of CeFi, I think the liquidity will naturally port over, and yeah, I think it's going to be very competitive then, especially with like really good tokenomics and low latency. Yeah.
I think that's very true, right? When we look into different crypto world, you know, if I want to buy BTC with USDT on Tron or on Ethereum, it's going to be a nightmare for most people, especially the institutions, to basically manage a treasury across different chains and buy those assets. And therefore, that's why centralized exchange is winning on that front, because it's deposited in the same exchange. You could pretty much trade any asset on the exchange. But I think Orderly is doing a great job in terms of aggregating those liquidity across multiple chains so that it make it a lot easier and better for users to basically trade different tokens on different chains. And then I think, Alina, from your perspective, right? So you came from a very traditional finance technology provider perspective. You have seen how technologies have enabled institutions to like trade even like equities, Hong Kong stock, US stock. Like, what's your take on this?
Yeah, thank you. Yes, we've been working with institutional traders using sophisticated strategies, and I can support the message from just like a technical as a technical vendor standpoint. Indeed, we see lots of inquiries to set up infrastructure across different types of exchanges, because sophisticated traders, they tend to use multiple strategies and trade different asset classes. And we've seen some growing trend in terms of inquiries to set up infrastructure to help lower latency to access DeFi exchanges. But I don't remember we've had an inquiry just to set up on a DeFi exchange. It always goes like a CeFi exchange plus DeFi exchange. So it makes me think that institutional traders, sophisticated traders, they trade on different CeFi. They need to access different types of exchanges and not only DeFi.
Cool. Yeah, indeed. So, yeah, I think when we like just now we basically talk about decentralized exchange. We need to improve on UX UI. We have to improve on liquidity. We have to improve on like latency and connectivities to have a stronger technology foundation. I think it's also good to then put the spotlight on the centralized player like Gate, because when we talk about decentralized and like DEX and SEX, usually transparency emerges as the one single biggest concern. So I would like to understand from your perspective, Edwin, like how is SEX addressing that transparency topic?
Okay, thanks, Jason. And happy to share. I think take a step back, looking at the difference between CeFi and DeFi. To be blunt, I think there's still a gap in between. The mass adoption as well as the institution standard has yet to be reached, to the CeFi stage or even TradFi. There's still some stages to meet. So looking at what CeFi has done, or particularly at Gate, what we have seen is that there are a lot more stronger demand in terms of the segregation of assets. This sounds boring terms, but actually this has been emphasized over the past 12, 16 or 18 months. But when I say segregation of assets, actually I can see on two aspects. One is that we have been integrating with a lot of custodians and also prime brokers. What we wanted to achieve is that through the integration with these leading custodians or prime, they can do their own strength while we can keep our own strength, which is trading. Clients can, especially the institutions and family offices, we see that they wanted to keep their assets in a safe, their trusted wallet, trusted custodian, be it a crypto native ones or even the bank-related custody arm. They would continue to be safe and regulated, as well as properly insurance protected, while we can enabling clients can trade through the off-exchange settlement protocol in order to trade through us. So once, I think since last year when we enabled this protocol, we actually see a spike of trading volume from family office and institutions. So that's one we have actually focused it on, and the other one is about the segregate proof of reserve, right? After 2022, we have been seeing a lot of family office as well as investors when they're doing due diligence on us. On some projects, they will be asking us to give us the audit, financials, or actually these kind of proof of reserve. So we have been emphasizing to the public that we have 1-to-1 reserve ratio, and also we are one of the pioneer using the Merkle tree data structure, as well as embedding the CK proof in it. What we wanted to achieve is that while the data can be verified, can be transparent, but we don't give up the user privacy. We don't give up on that front. I think that's essential. I'm not trying to say how sexy Gate have been done on this part, but I'm actually seeing this as a norm. This has been a norm for institutions, exchange, and actually what I was expecting, and actually I'm started seeing that DeFi has already moved it to this part in order to get the institution adoption. Once it crossed this institution stage, the big guns are coming into the DeFi space, you start seeing mass adoption. When we see half year back ETF was coming at that point of time, big guns already set up the funds, and people publicly can start buying through that. So this is actually, every single step actually counts, and actually these are the progress or the steps that actually CeFi has gone through.
I mean, it's a really great point. As a user of Gate myself as well, I would say I'm very delighted that Gate has taken the initiative to, although they're a centralized entity, but they take the spirit of decentralization, bringing a lot more transparency. Telling people that how much asset is actually being put in their reserve, to know that my asset is being saved. So I think that is how we're gonna do things differently in the crypto blockchain world.
Yeah.
Great. So I think now we have witnessed the emergence of many new protocols that bring breakthroughs in transaction cost, security, and transaction efficiency. So what areas of improvement would you consider to be the most important to drive institutional involvement in this space? So Damon, why don't you share some of your perspective? Yeah.
First, thank you for having me. I mean, actually, about no matter this question or the last one, the key is that, like a DeFi adoption, I mean, the biggest question is why people, no matter retail or no matter institutional, they want to use DeFi. To be honest, like why people go to NASDAQ, not like other exchanges, is because there are like a unique asset there. So, for example, even today, there are some frontier new born asset is in DeFi, not in CeFi. So in that case, definitely people go to DeFi. So asset will be like, I would say that the biggest thing for one, The second is like DeFi is safer. Like before FTX and after FTX, definitely people will take difference of the counterparty risk for CeFi. So, but to be honest, for most retail people, they care about easy to use more than risky about a counterparty. So, and not to mention like, because we have many institution clients, and usually we will ask them, say, whether you will be active in DeFi. And their answer will be, we won't, but their LP has concern about DeFi. So it takes time for mainstream to step by step to know about DeFi. So when LP is like comfortable with DeFi, GP will be much more like flexible. So I would say first, it's definitely take time. Second, it's like, I would say asset. And the third one is suppose, and I believe down the road, there will be another FTX example. If there will be another FTX example, definitely not Gate. I mean, not LTP, but there will be. So next FTX will help DeFi go to better. So definitely their UI, their transaction volume, they need to improve. That's like the essence of the system. Like the CeFi improved themselves, CeFi comparing 10 years ago, different CeFi, right? I believe after 5 years, different CeFi, different DeFi. But it takes time, and it's people need to get scared about their money is safe or not. So they go to DeFi, and there need to be more and more like a frontier, new born asset on DeFi to make people go to DeFi. So that's my point.
I totally agree. I think one thing very attractive about DeFi is really the diversity of the product that you could trade and see in the market, right? Like now we have liquidity staking. You could or invest in like delta neutral vault where it yield synthetic stable coin where you could re-leverage that and therefore that provide a lot bigger type of a lot more variety of investment product for investor to choose from their perspective. Cool. So what about Chae Ho? What about you? What do you think? What kind of breakthrough is the most important to drive institutional adoption?
Yeah, well, I think it's regulation. Institutions care much more about the AML risks, KYC of the users that's on the other side of their transactions. So that's definitely something that DeFi is lacking at the moment. And from 1inch, we think that the regulated DeFi is destined to come in the future. Not so early, but because I think the regulators are still busy with the CeFi regulations at the moment, but I'm sure it's gonna come sooner or later. So we are actually preparing for this regulated DeFi space. As the new protocol we have launched last year called Fusion Protocol is actually perfect preparation for this regulated DeFi, because we aggregate different market makers who have KYB and KYC with us. And we also, at the same time, we also go through rigorous AML checks. There are many other platforms like TRM, Chain Analysis, who provide this very sophisticated AML checks and services to us. So we pay quite a large fee to implement this AML risk control measures as well. So once these KYC and AML features are all ready in DeFi space, I'm pretty I actually think that institutions will be, for institutions, the decision to come and play and trade more on DeFi would be much more easier for them.
I see. Great. Great. You mentioned about the point on regulations and compliance, because I mean that has always been a gray area. I don't even think that there's a framework to think about how to regulate and control or have some sort of protocol to protect the interest on DeFi. I actually want to bounce that question back to Damon, because I understand you guys is a risk management platform, and you probably will have some, like, yeah, what do you see, you know, from a risk management perspective or regulation perspective, like how do you see the path going forward for DeFi? Like, is there anything that is gonna important, or like from your experience learning from the centralized world, is there anything that you believe is important that DeFi needs to have in order to prepare for a regulated future?
It's more on the like risk management, this as a perspective, or like overall.
I think it could be on risk, because I would believe risk management is going to be a core part of regulator to make sure investors' interest is protected, but then it could also be overall if there's other points as well.
Yeah, I think for regulator, that's keyword first. For risk management, that's second one. Because for this decentralized protocol, they're transparent enough. So for regulator, it's easy for them to understand, okay, what's in the core that entity, a protocol, what they're running on, right? Because for CeFi, to be honest, even there are, anyway, this is a black box. So so a regulator needs to set up a lot of rules to make sure they don't do everything weird. But for DeFi, it's clear for regulator to see what they are working on. So I would say KYC, AML, that's KYB. That I will say that's the top one, and then the most biggest one. And if we're talking about other like a risk, maybe it's not like a regulator perspective. It's like as a manager perspective, right? They definitely will care about the counterparty risk, whether the protocol itself is safe or not. Personally, if someone asks me, Damon, you can stake money to some different like protocol, big concern on my mind, especially these new ones, like whether it's safe or not, whether hacked or not, right? And I don't think today, like the protocol themselves, like put, for example, as a threshold for risk management, like liquidation very aggressively. Most protocol, I will say, okay, it's kind of safe. So for asset manager, in addition to counterparty risk, in addition to regulation risk, in addition to like a hack, these kind of things, then the risk is mainly about the asset manager, the trader, their strategy itself. So to this perspective, that's very similar that they manage the risk, no matter in CeFi or DeFi. So, but back to your question, I would say for regulator, if I was a regulator, I think DeFi is much more easier to regulator than CeFi. If I know everything they're running. So yeah, that's my point.
Totally agree. I mean, yeah, as long as they learn how to read Everscan and read the on-chain data, it's actually a lot more transparent than the traditional financial system. Cool. So yeah, we talk about for institutional adoption for more DeFi, like the breakthrough that we need to see is like on the regulation side, on the product variety side. Ran, from your perspective, do you also see other important breakthrough that you think is important to drive institutional adoption of DeFi?
I think everyone's pointed out the biggest pieces. I mean, for us, I think it's still to make it feel like what they're used to, plus the additional, like, let's say, token incentives and the additional transparency, right? That's kind of the trade-off. So, we want to also have, like, off-exchange settlements with custodians and places where institutions want to park assets and they feel safe, right? Not in smart contracts necessarily. So that's one big hurdle. And then obviously the KYC AML layer, which is probably one of the largest hurdles. So for us as an order book, like permission order book perhaps, and yeah, like whitelisted addresses that can interact with each other. These are the things that institutions care about. And then it's the liquidity and the assets that they want. Yeah.
Got it. Thank you. Cool. So yeah, indeed. So I think today's the panel really focused on institutional adoption, in the crypto space, like how we can have more institutional coming in, no matter whether it is centralized finance or decentralized finance. We want more institutional money to come in to pump the market. Hopefully, Bitcoin is going to be mooning soon. I think to wrap up the panel, I think the last questions that we really want to discuss is, like, from your experience, each of the panelists, what infrastructure needs to be built better to help institutions get involved in this market? And lady first, why don't we start with Alina?
It's great that a word transparency has been used many times during our panel, because I think one of the drivers should be transparency from infrastructure setup standpoint as well, because institutions have certain requirements towards their infrastructure setup. It's all about optimizing latency, optimizing infrastructure on a hardware level, and from the connectivity standpoint as well. So it should be understandable where the infrastructure is located physically. What is it really matters for institutions, because as we mentioned, they trade on multiple exchanges, and they need to optimize the infrastructure, and the ideal solution for them is to use the same infrastructure, the same servers, the same connectivity to AWS clouds, for example, using the same infrastructure for multiple exchanges and for DeFi as well. So they need to understand the physical location, how this infrastructure for DeFi exchanges, what is behind this infrastructure setup. So the more transparency, the more institutions will adopt DeFi exchanges, trading on DeFi exchanges.
Good. Thank you. And Choi, what do you think? What is the most important infrastructure that needs to be built for institutions?
Yeah, well, as I mentioned, I think it's I'm not sure if you call that infrastructure, but you need more platforms that allows connections between platform where you allow the institutions to trade with counterparties who are AML checked and KYC, and so that you need like a easier API, easier technology, ready for use, readily prepared technology platform that allows the institutions to do this. And I think that's the key part in bringing more institutional participation into DeFi platform. Yeah.
Cool. What about you, Damon?
Yeah, I mean, infrastructure is a big word, right? It's I think all our five, we can say each company infrastructure, right? Infrastructure DeFi, infrastructure CeFi, like Avelacom, like trading, and we ourselves like asset management infrastructure. So from my perspective, because these gentlemen already mentioned about this KYC ML, I think from regulation, first, there's definitely a trend for asset management. That more and more institutions, no matter before they are trading team like a prop trade or before they like SMA, they all go to like a more fund structure. So in that case, like auditing, more seriously like data management, like generating report for their LP, no matter government, no matter the auditing, is definitely the one big trend or pressing requirements for, I would say, crypto asset management, this ecosystem. So no matter like this like a buy side guy, even today you go to auditor, say I have high frequency trading, I have DeFi, and I have for a derivative, whether you can audit me or not. To be honest, most like auditor will say sorry, we don't have the proper infrastructure there. We have the Excel, we have these like auditing tools from the traditional, but we don't have a crypto one. So that's why one token comes. So Basically, like we help these guys, no matter like from buy side, admin, or auditor, to help them to easily to do these regulation things, auditing things, to move the institutional market to a little bit forward. So I would say auditing, in addition to like KYC AML, in addition to like no matter like a third party or no matter like a vertical, but also even though these things are there still need to be infrastructure for software level to support the whole ecosystem to be more regulated on the auditing, transaction management, this perspective.
Cool. Yeah, and Edwin?
Yeah, for me, I just want to sidetrack a little bit. You know, with the earlier gentlemen were talking about regulations, and I think on the CeFi regulations, especially in Hong Kong, is pretty new, and DeFi, you know, in some space there's actually uncertain. Sidetrack a little bit was this morning I was actually having the closed door meeting with the custom department, Guan, basically just next door in this conference. So basically, you know, we were sharing all the pain points among the industry peers with regards to the VAOTC, the licensing regime, which is upcoming in Hong Kong. During the discussion, one key takeaway that, you know, the government officials from the custom department was saying that, hey, they are new, they're willing to learn, they're willing to know the industry peers, you know, who they are, and what are the pain points, what are their needs. This actually this morning, the representative coming to us and informing us this is the key message. So what I'm trying to say is that, you know, regulations, while we keep thinking whether we should meet the regulatory standard, but actually, especially perhaps in the DeFi space, is that it's too new. It's new that, you know, the government officials or the policy makers wanted to understand more and, you know, help them to help you how to, you know, work things out. If you can address, or say in the DeFi space, you can address all the user privacy, the investor protection, you know, the segregation of assets, how are you going to do so? And the earlier gentleman mentioned about the KYC, how all these AML, CFT ordinances are all put in place. The regulators willing to learn from you, and if you have solutions, you know, your life will be a lot easier in the DeFi space, and you help their life a lot easier as well. So this was a message from this morning. Perhaps that's more on the regulation side, how, you know, I think this should be the way that it should grow, not only in CeFi, but also in DeFi as well. And to answer, you know, Jason's questions about, you know, what else, you know, that can be done or can be leveraged from, I would say running a CeFi is very costly. You know, you need to have the capability in terms of liquidity. You also need to make sure the regulations which I mentioned, you know, is right. And what else is that we see the payment gateway is very important, especially these days during the bull market, everyone's on-ramp and off-ramp. You know, we have been constantly meeting with banking partners or legislative council to talk about all these, you know, banking railways. I think that's also, you know, helping to bridge the institutions and also the retails to start using the crypto, adopting the crypto. That's one on the payment solutions. And also, you know, during the enhancement of the crypto industry, I would say the cross-chain development as well as the cross-margin settlement, these are, you know, very similar to the banking days where I was in. You know, people were trading derivatives, we were trying to make sure the capital utilization is maximized. These are how we started to bring more experts from the TradFi people, you know, to embrace the crypto as a new asset class, to work some solutions which is tailor-made for institutions. And as I said earlier, once the institutions, the traditional ones comes in, you know, this will help more mass adoption. You and I will follow the you know, big players coming into this space. And again, this not only benefit to CeFi, which we have experience from, but also, you know, when we start expanding to Web3 wallet, you know, the DeFi wallet, and we also see this pain point and this industry needs. Yeah, cool. That's pretty much.
Thank you. And last but definitely not least, Ren, what would be your take on this?
I think everyone's mentioned all the things to drive institutional adoption, right? That's the, yeah, I think, yeah, it's basically what everyone else said. I think on-chain credit, that would be very interesting if we have under-collateralized credit, right? Like in CeFi, we don't have that. That's probably one of the key missing pieces. And then a more broader category would be identity, right? We don't have any identity solutions that are standards currently. You know, if that were to, so that includes the KYC and the, but even just proving people are humans. I mean, this is a more wider spread problem with like trying to prevent airdrop hunters and such, right? So just identity, ZK identity type of solutions.
Yeah, which I totally agree. I mean, we have been talking about on-chain KYC, on-chain identity for a long time. I think, especially in the regulated world, like multiple jurisdiction, if there's one on-chain thing that could solve all this, like basically do the KYC, AML KYC check in one go, I think that would be awesome. So thank you very much. I think to conclude today's panel, I think we have heard of a lot of like great ideas about how we could do better on the regulation side, how we can do better on the transparency side. And you know, if we have to summarize it, what I see is really like DeFi and CeFi is emerging together. There's a lot of things that DeFi need to learn from CeFi in terms of user experience, in terms of product performance, in terms of education, while like CeFi also have a lot of things that could learn from DeFi in terms of transparency, in terms of security, etc. So thank you very much. I think this is exactly why crypto is a one big family. We have this kind of conference. Thank you, LTP and Gate, to have this kind of sharing sessions for us so that we could learn from each other and progress together as an industry. So I definitely have learned a lot today. I hope you also would have learned something today from our panel. Thank you very much for our panelists' time. Thank you.